So in the overnight session, the market balanced in the upper part of yesterday's range, and the main catalyst this morning was the CPI number at 7:30 a.m. Central Time. And following the CPI, we've seen a breakout into the strong resistance at 6,070 quarter to 82 quarter, where so far responsive sellers have been active. Heading into the open, our intermediate term bias will continue to be bullish, and our short term bias will now be neutral bullish because at the moment the buy side is dominant and in control. And the main question is whether we will now break out above this strong area of resistance, which would serve as a bullish confirmation. Now, if the market is going to put in a sustainable breakout, then ideally we want to see buyers holding ES above the 6,042.5 to 53 pre-market support. Holding above that area would be a sign of strength. It would tell us that the buyers are still dominant and in control, and as long as we're seeing continued strength and sustained upside momentum, there would be potential for a break above the strong area of resistance. Now, when it comes to strong resistance zones, these are major inflection points where there is potential for larger time frame sellers to be active, and that is exactly why our short-term bias is neutral bullish as opposed to full-on bullish, because there is still the possibility of sellers stepping in here, and in the event that we get a breakdown below pre-market support, that would be a notable warning sign for buyers, and that can lead to a move down into the initial support zone at 6,021.5 to 26.5, where buyers may still be active, but we will need to exercise caution because a strong market should not have to retrace all the way back down towards the overnight low. So if the market does return back to initial support, then at that point we have to question whether the overnight breakout is still in play. And if ES breaks below initial support, then that would be the first notable sign that this is now turning into a false breakout pattern. And if the market is breaking lower on some big and sustained downside momentum, that would signal trapped buyers, and it can result in range expansion to the downside into 6,013.5 to 15.5, followed by 59.95 to 6,005, and then a break below the 59.84.5 to 92.5 area would serve as an intraday bearish confirmation, and that can then open the door for a test of 59.62.5 to 75, where buyers can still be active on first test, and the lower the market pushes, the better the odds of buyers stepping in. Now, in order for the bearish scenario to trigger, we will need to see a failure at initial resistance, followed by a breakdown below the pre-market and initial support zone. And if that breakdown below initial support is legitimate, then we should easily take out the 6,013.75 high volume node as well.